Good morning, Jags. This is Fahad. Today is Tuesday, February 9th. Let's get started. One stock on my watch list this morning. That's N-Light, symbol LASR. Many Jag clients are pretty familiar with this one because right over here, after 6-7 months of consolidation, around October 27th, just before we had that massive spike in early November after this earnings report came out, we had presented the bull case about this before that massive spike right here in conversations on October 27th and light. And we mentioned at that time that we were taking a deep look into the this industrial semi, which posted record revenues in the second quarter and now expects those revenues to accelerate with rising manufacturing Chinese PMI. And it turned out to be a very well timely put together piece because we saw a massive spike post after the earnings came out on high volume. The stock consolidated for a while, then continued to grind higher, making higher highs and higher lows. But for the past 2 to 3 months now, it has been rather stagnant, right around this $32 and $33 per share. And the reason for weakness a little bit on this name, a little bit yesterday, is because apparently investors were shedding this name because its competitor COHR was being acquired yesterday. So as a result, in sympathy, this thing was selling off, which doesn't really make a lot of sense anymore. Anyways, couple high-level thoughts over here. First of all, earnings are coming out on, I believe it's on February 17, which is next week, and the stock has modestly pulled back from 52-week high of 37.50 or 38 rather to currently at 32. So it's down about 12%, 13% from 52-week high. And I think that this is right here presenting a buying opportunity with the MACD and the RSI levels having been corrected. I expect a very strong quarter next week from this company, and I expect this to spike and go right back to new 52-week high. Couple of reasons why I conclude that decision. Number one, if you look at the overall trajectory of PMI trends globally, particularly in North America, you will see continued increase for the past 3 months since that last earnings report came out. Back then, when we were in October, we were looking at PMI levels around 52, 53, and now we're seeing 58, 59, and 60, both PMI as well as ISM manufacturing level. The second thing is that what the company told us the last time when it reported earnings over here, their third quarter revenues were up 20% year over year organically and 18% up sequentially quarter over quarter, reaching 62 million and easily beating consensus estimates of 59 million. And this was largely driven by the upside in new commercial directed energy customers, which was very unusual for the company because previously they have depended significantly on one large customer that is called Neutronics, which has driven a lot of the sales. But they seem to have found far more diversified base of the customers now. So they have a lot more new commercial energy customers that have basically come into the picture, and they're all supporting to the upside. And I think this goes back to the point about PMIs being rising gradually all over the place. The company also mentioned that its end markets in all geographies around the world grew year over year. Specifically for their high power 6 kilowatt laser sales were up 50, they represented 58% of the total mix, an increase from 54% in the prior quarter and 40% a year ago. Why is that important? That's important because this high power 6 kilowatt laser carries a much higher margin than other products. So now when it's representing more than 50% or 58% specifically of the total laser sales mix versus 40% a year ago, you're starting to see gross margins as a result for the overall company also improve. And we saw that last quarter reaching 28.6% versus 26.5% estimate. Overall, we have seen laser product gross margins increase by 100 basis points year over year and 400 basis points sequentially quarter over quarter. Further breaking this down, you will find out that North American sales were up 35% year over year organically, once again removing the impact of Neutronics, which always tends to create a lot of noise around the company because it's a big piece of the company. But still, 35% organic growth year over year in North America, and North America accounts for 51% of total sales. This was when the PMIs in the US were 53, 54, and now PMIs are 58, 59, and 60 level. So I think that momentum continued and rather actually improved. And then one last thing that I will say is that if you look at the earnings transcript and read all the management commentary, you will find out that they have made tremendous amount of investments in welding and additive business, and they've done some tuck-in acquisitions as well, and they seem to be actually providing quite a bit of boost to the company. So for example, the acquisition of the Italian-based beam delivery specialist called OPI, and then the opening of a welding focused facility in the US in Detroit, and then also a launch of a brand new product called AFX 1000 laser, are all the big highlights of companies' programmable differentiation and long-term growth drivers, which are still not fully baked into the consensus view, in my view. All of these major events, the acquisitions as well as the launches, happened within the past 3 months or so. So I understand that since that blowout quarter back in November, the forward earnings estimates have slightly gone higher, and the price targets have also been raised on the street, only modestly. So for example, I'm looking at Stifel for right now. Stifel raised their price target from $27 to $29 per share, and the stock is trading at $32.50 right now. But this is still low. I think the street still has tremendous amount of catch up to do over here, and is trading at only 4 times enterprise value over sales. So I expect that when this company reports earnings next week, we're going to see another very strong quarter, and I wouldn't be surprised if it breaks out and makes a run towards $40 per share. That's it from me. Jay is not with us today. He's going to join us tomorrow. So let's go straight to Chronicle.
Morning. So I've been really digging value stocks lately with SBLK and then CCO and SXC yesterday. Part of this is because I'm anticipating momentum stocks are going to have to take a little breather at some point. So in keeping with this theme, I opened a new bullish trade yesterday in Fresh Del Monte, symbol FDP, which is a fresh produce company that everybody's probably heard of. But in case you haven't, this company basically sells fresh produce and byproducts, mostly fruits, both in original form and fresh cut, which tends to be higher margin. And they're currently being sold in 90 different countries. And to give a bit more background, you'll probably know them as the biggest marketer of pineapples and fresh cut fruit in the US. But also they are the global leader in bananas, which makes up 37% of their revenue. So this one's a bit of a comeback story because last year was a difficult one for the company. The pandemic resulted in them having to write off a lot of their shipments. They also encountered plenty of supply chain problems, which resulted in their bananas from South America going bad. And then on top of that, during Q2 last year, so right at the worst time possible, the banana plantations in Ecuador and Central America unfortunately got hit with the additional diseases on top of the long-running Panama disease, which has been a headwind for the stock because of all the affected shipments. So all of these supply chain problems combined with less demand for their fresh cut offerings relative to non-perishables, this all resulted in the company reporting an 8% year-over-year decline in sales for the 9 months to September of last year. But currently, I think there's a case to be made for a turnaround because, first of all, the Panama disease aside, it looks like the other diseases have already subsided. And looking at the latest channel checks from the Banana Marketing and Export Association, it looks like the shipments from Ecuador's largest packing area has now returned to the long-term average of 27,200 boxes per week. And in terms of total volume, banana exports are currently tracking 7% above 2019 levels. So Ecuador, which is the world's largest exporter of bananas, has fully recovered, and their shipments are now at a higher level than pre-COVID. This is obviously a good read for Fresh Del Monte. So that's the channel checks part of my bull case. Now, the other points I'll make is that first off, in terms of seasonality, the first half of the year historically tends to be a strong period for the company. Like if we look back at all their past financials, we will see that Q1 and Q2 tends to see higher revenue compared to Q3 and Q4. And then my other point is that during the pandemic, management took some actions to reduce their operating expenses by about 10%. And they've also raised their dividend after having slashed it in half for a couple quarters. And when I look at their cash flows and balance sheet, I wouldn't say it's excellent, but it's not bad. So unless we get another black swan like COVID-19, I don't think there will be any more dividend cuts in the near future because the worst is now behind us and we're now entering a strong seasonal period. But in all honesty, if rates continue to go higher, that's actually detrimental to staples that have higher dividend yields. So maybe it's a good thing that the dividend isn't high. But that aside, consensus is currently looking for 4.7% sales growth in 2021. I think that estimate needs to be revised higher now to at least high single digits. Meanwhile, they're looking for 60% growth in EPS to $1.75. So looking at my annotated charts, it looks like there's some accumulation that's been going on for the last 6 to 8 months. I think the stock can eventually get to the next VOP cluster at about 3150. And then over the longer term on the weekly chart, I think it's going to eventually attack the resistance level of $37.
That's a substantial move in the total percentage wise in the stock price to go from $26 per share. Your annotated chart over here, you're giving it 6 to 8 month time period, that's the accumulation period. So how much time would you give it to eventually get to $31, $32 major VOP resistance level? The stock is currently at 26, and this represents nearly 20% upside to get to that level.
I would give it the remainder of the year,
The remainder
although
of the
with
year.
moves these days.
Yeah, anything is possible because it has earnings coming out next week, so that could itself, serve as a major catalyst. Very interesting play. And longer term, you believe this could get to about $37 per share, which is annotated in this particular chart. Purely, here's another short-term look. Technically, this just started to break out. It's lacking a little bit of volume, but that's okay. Volume can come in later, but we clearly have the momentum indicators, the RSI and the MACD indicators are lining up very nicely, and the stock is starting to break out. Lots and lots of air pocket in front of it if it plays the catch-up. The one thing I will say is that 2 weeks ago, I sort of just threw this idea out in the chat room where I started to talk about, boring can be good. Remember that term? I used it a couple different times that, we've got a lot of overstretched levels in this market, looking at the RSI levels in the small cap and the mid cap space, lots of hot momentum names out there. If there were to be a correction, given that the fundamental background in the economy remains quite strong, I think it could be rather shallow or consolidation phase for the market than anything else. And if that leads to a rotation in the market, we could see the money rotate basically to some safety names like utilities and staples and all of that. And so naturally, in that scenario, FDP would also benefit. And so boring can be good. And this chart is starting to act very strong. I like the story. I like the technical picture. And maybe one way to take a look at this would be at call options at the June 25 strike. We'll see. All right, great stuff. That's it from us today. Short and sweet. We will see you in the chat room shortly.